I hit up Jan van Eck. It was just last week. I said, Jan, you've got to do this. You've got to file for the Dogecoin ETF. He's like, I just want to make sure I don't go to prison first. I said, look, you'll be fine. It's been around. It's proven itself. It's outperformed Bitcoin every cycle. I mean, it's been astonishingly good. So I'm working in the background to try and make this happen. But I haven't got through Jan yet, but I'll get somebody. We'll get Hunter Horsley, Jan, one of these guys will force across the line. It's unlikely to be BlackRock, but we'll give that a go too.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Real Vision founder and CEO Raoul Pal is making a prediction about a potential widespread super bubble in the financial markets. An observer would notice changes in asset prices. The prices have surged dramatically, seemingly out of nowhere, Raoul draws parallels between the current bubble and the market bubble of 1999. Or the dot-com bubble of the late 1990s. During that time, investors eagerly invested large sums of money into technology and internet companies, even those with minimal revenue or profit. The prevailing belief was that these internet-based companies would transform the economy and yield substantial returns in the future, driven by the rapid growth of the internet and technological advancements. As a financial analyst, it is evident that the tech industry experienced a significant surge in stock prices during the initial public offerings, IPOs, of tech startups. These IPOs were highly sought after, leading to soaring valuations that reached unprecedented levels. In the world of finance analysis, traditional valuation metrics were disregarded and replaced with overly optimistic projections and hype. However, by the early 2000s, the bubble started to deflate, and investors began to recognize that many of these companies were overvalued and lacked sustainable business models. The stock market experienced a significant decline, resulting in substantial financial losses. The Nasdaq Composite, which experienced a significant increase between 1999 and early 2000, saw a substantial decline of almost 80% in its value by October 2002. The collapse of the bubbles resulted in a wider market downturn and a substantial decline in wealth. My friend thinks we're on the brink of another enormous bubble that will lead to a substantial increase in asset prices. However, this bubble is expected to burst when investors finally realize the consequences of their actions. The CEO of Real Vision shares this concern, stating that this potential bubble could pose a significant threat to the financial system in the near future. And lots of things Raoul Pal discusses, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
Interesting about meme coins is that utility is either zero or small, right? Bonk has some utility, Shiba Inu has some utility. But the actual cultural value is the attention that these things get. The attention is upstream of everything. And so it's so easy to understand. You don't need to value it as, does this capture attention? Is that attention persistent? And do I get some sort of feel-good factor or status by owning it? And it's the same as a LVMH, a Louis Vuitton handbag. And it's the same with fine wines. It's the same with the meme on the internet that you share. It's all the same thing. It's just concentrated attention. I'm less I just don't have the time. I just don't have the time. So if you think of a lot of the degen stuff is basically attention. I don't have enough attention to give out because I'm too busy. So I've kept it pretty straightforward. So I've got Whiff, Bonk. I still own Doge because I still think Elon's going to do something with Doge. And that's about it. I observe the space. Everyone reads Ansem's feed and trying to figure out what the fuck's going on, stuff like that. But I don't have enough attention to give out to the attention that it needs. So you can actually need to know what you're doing a little bit. So yeah. Arthur is obviously, he's a man of leisure. He can do whatever he wants. He's got time.
Yeah, I mean, to Raul's point, my leisure consists of running around a court and hitting a felt ball, or putting on a piece of board and skiing down a mountainside. So I also don't have the attention to spend on which particular doggy coin is the hottest one. I own some with Dogecoin as well. I think Dogecoin is going to get an ETF by the end of the cycle, just because.
Yeah, I think so as well.
Oh,
because it
really?
should.
And
Yeah, I agree.
Yeah, it's the oldest meme
Wow.
coin. It's on Robinhood in the US. Like, if you're thinking about, TradFi getting into crypto and they're going to put an ETF in anything they can, it's a high market cap thing. It's been around for a while. It's like the original meme coin joke. I mean, Palmer fucking rage quit from crypto, even though he created this like amazingly hilarious thing. So yeah, I think Doge gets an ETF before the end of the cycle.
I hit up Jan van Eck. It was just last week. I said, Jan, you've got to do this. You've got to file for the Dogecoin ETF. He's like, I just want to make sure I don't go to prison first. I said, look, you'll be fine. It's been around. It's proven itself. It's outperformed Bitcoin every cycle. I mean, it's been astonishingly good. So I'm working in the background to try and make this happen. But I haven't got through Jan yet, but I'll get somebody. We'll get Hunter Horsley, Jan, one of these guys will force across the line. It's unlikely to be BlackRock, but we'll give that a go too. It's actually a good place to test out narratives is here in Singapore, because that's that kind of, as you said, it's a culturally diverse Asian audience of, Asians are big gamblers. They love meme coins. They were big buyers of Doge and most of the other kind of dog coins and stuff like that. And you just have to see, is that going to resonate here? And they don't care about Trump and, all of this kind of stuff. They want something that they can talk about that crosses cultural boundaries.
When comparing the compound annual growth rate of Bitcoin to the returns achieved by Warren Buffett's portfolio, which includes top holdings like Apple and Bank of America, American Express, Coca-Cola, and Chevron Corp, exhibit contrasting risk-reward profiles and performance across different time frames, as indicated by the data provided by the Lazy Portfolio ETF resource. Warren Buffett's portfolio has achieved an impressive 10.3% annual growth rate over the past 30 years, with a standard deviation of 13.67%. In comparison, stock portfolios of United States companies have generally provided similar returns, although with a higher level of volatility. On the other hand, the performance of Bitcoin since its inception in 2011 has been truly remarkable. Bitcoin has achieved an impressive average annual return of approximately 104%. This figure consistently outperforms the returns of Buffett's and US stock portfolios year after year, with an impressive track record spanning 13 years. Bitcoin's KGR surpasses that of its competitor gold, which has yielded an average annual return of 6% during the same period. This indicates that although US stock portfolios have achieved a similar key AGR to the Buffett portfolio, the higher volatility of Bitcoin may not be suitable for risk-averse investors. Gold has shown a modest 6% average annual return over the past decade, making it a stable investment option. Additionally, it serves as a safeguard against economic downturns. Many traders and investors regard Bitcoin as digital gold, viewing it as a hedge against inflation and currency devaluation. This perception has enhanced its appeal as an asset over the years. Notably, several US companies such as MicroStrategy and Tesla have added Bitcoin to their reserves, followed by the launch of Spot Bitcoin Exchange, traded funds ETF that have further solidified its status among institutional investors that said Bitcoin remains highly volatile, with its price subject to extreme fluctuations when compared to the stable returns of Buffett's portfolio in recent years. However, Bitcoin has exhibited lower volatility than many S&P 500 stocks, including Tesla, Meta, and Nvidia. The Buffett portfolio represents a more conservative long-term strategy with consistent returns and manageable risk, even though it has exposure to a pro-crypto neobank in new holdings. In contrast, Bitcoin has provided much higher returns, albeit with significant volatility and several big downturns over the past 13 years. Let's back to the Raoul Pal interview.
Obviously likely to happen at some point in this, just because of how divided the society is. But when you narrow everything down, the outcome for everything is printing money. So the worse anything happens in the US, the more likely they are to print money. So election years tend to be very, very positive, and the year after for risk assets, just because everybody's buying votes and then kind of proving themselves afterwards and mocking up the pieces and paying that interest on the debt. So there's that military side, You've then got all the retirees, who are the baby boomers with all the votes. Well, they want their health care. And then the third part of the equation is somebody needs to pay the interest on the debt. And the only way of doing this is the magic money printer.
Not independent now. It's a whole.
They're the same thing.
Oh my God, the Fed is independent. Jerome Powell is impotent. He can't, even if he believes he's like the most powerful person in the world, Janet Yellen can do whatever the fuck she wants. And yeah, Powell hasn't raised or cut rates, but Yellen can drain the Treasury general account by $800 billion with the stroke of a pen. You know, she can cut a bank off of SWIFT if she wakes up on the wrong side of the bed. Yeah, she's the most powerful person in the world, and her number one job is to get Joe Biden reelected. And so whatever, you know, Powell and all the governors can write all these fancy fucking papers over, you know, Mariner Eccles building in New York, but the Treasury Department runs a show, and they always have run the show. And if you read some of the papers, that there's a recent paper by the Atlanta Fed on central bank FX swaps. And essentially the paper was arguing that the Fed has always backed up international dollar borrowers ever since it was created in 1913. And it goes stepwise through every single incident where the Fed essentially printed money and handed it out to a foreign institution or a foreign branch of a bank. And the conclusion of the article was, we've been doing this for 100 fucking years, so let's do it some more if we need to. There is no independent Fed. And that was written, I think, last month by the Atlanta Fed. Great paper. Highly recommend reading it if you have time.
You follow Arthur's argument. You can see there's a shortage of dollars around the world, right? We lost US banks. We lost a giant Swiss bank. We're losing dollar yen, right? That's a shortage of dollars. And we've got Yellen going to China twice, right? She's there because her other job outside of getting Joe elected is to sell bonds. She's the Mike Milken selling junk bonds, going to China doing the roadshow. China's like, yeah, we'd love to buy your bonds, but we don't have any dollars. So you give us dollars and we'll buy bonds. So they have to figure out how that can be done. Now, nobody really wants to give China direct swap lines. They probably do it through Japanese bond intervention, by currency intervention. Either way, the G20's coming up or G7's coming up. There'll be some magical allowance for everybody to have enough dollars for the system to move forward and everything to happen. So there has been no independence since 2008. I think I don't think there's much independence between central banks either. I think the BOJ kind of taught everybody the trick. Everybody's followed suit. They've all got the same problems, which is the debt and the aging populations, and everybody plays the same card. And there's, the BOJ and the MOF, that they stopped being independent in the 90s, even though on paper they are. And so it is all driven by the Treasury and required to refinance this debt since 2008.
A widespread market bubble will have a significant impact on the cryptocurrency market, easily affecting crypto assets. Bitcoin, Ethereum, and Solana are reaching new highs. However, history has shown that every bubble eventually leads to a crash and a severe market downturn. This downturn has the potential to spread across all sectors of the economy. Raoul and other prominent figures in the cryptocurrency industry have been discussing the significance of the 2024 US presidential elections for months. According to the renowned macro analyst and business executive, the election is likely to prompt the Federal Reserve to reverse its quantitative tightening measures. This reversal would have an immediate impact on prices, especially for crypto assets, which have consistently outperformed the Fed's balance sheet. Additionally, Raoul suggests that politicians may attempt to sway voters by distributing stimulus checks, further contributing to significantly higher prices. According to Raoul, these actions have the potential to significantly impact the markets and result in substantial price gains in the upcoming months. However, there is also a possibility of something going awry during the interview. Arthur and Raoul engage in a conversation about early indicators and the potential impact on cryptocurrency prices. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.